Welcome to my channel. I'm Tim Sutherland. I'm going to go over very important items that your lender needs to know when they're assisting you with your home purchase. If you got here because you're working with me and you're just checking out the descriptions to these items that I've emailed you, I want to thank you for your business. Appreciate it. And if you're not working with me and you found your way here, if you're buying a home, these are all items that your lender wants to know up front, but may not ask you. Depends on the experience of the person you're working with, how thorough they are. Some of these items that I'm going to cover may not come up till well into the process if you haven't brought them to their attention up front, and that can skew the timing or possibly cause disappointment. So I'm going to go line by line through this quick explanation. And then if you have questions, if you're working with me, just contact me directly. Otherwise, leave comments below. Thank you very much. So we're going to go line by line, starting here. This is something that I confirm when I've received the contract. Just helps keep us all on the same page. Sometimes I don't get the contract to a number of days into the process, and people think I've had it longer than I had. So I just like to make sure we're all know when we got it. One item, first item, final sales price. How much are you paying for the house? It's very important to know. Contract will not always have it. In most cases it does, but let's say during the negotiation process you added some addendums, went back and forth in the price, and I don't have the last addendum. Maybe I don't have your price right because I don't have that. So it's important to know this up front. So confirm the price. Some of these items will already be on the application, but most of them will not. So you can also double check on the application itself. Loan amount, how much you borrowing, that's definitely going to be on your application. Double check that amount. Is it correct? Is that how much you want to borrow? Because it's not something you can really change at closing quickly. Many of these items are not things that can be changed quickly toward the end of the process and can cause delays. Best to know them up front. There will not be any secondary finance. What that means, you want your lender to know if there's going to be a second mortgage on this house you're buying. Are you doing it through another lender or the seller did? Doing what's called a seller take-back, seller second. In other words, when you buy the house, the lender thinks you're putting 20% down, but you're only putting 5% down because the seller said, oh, I'll hold a mortgage for the second. It'll look like you're putting 20% down. Lender's got to know that. You might not qualify doing it that way, or you might. But it's an important part of the calculations along the way. You don't want to get to the end and find out, oh, it's not going to work now because of that. What it doesn't apply to, because I get people contact me sometimes, say, well, I'm pulling money out of my 401k. That's not secondary financing. Don't worry about that in terms of this question. It's going to be on your application, ideally. Should show that you're getting assets from your 401k. If it does not, you still want to cover that with your lender. Earnest money deposit, how much did you give? Is it accurate? Because all funds have to be verified. You want to get the end, and a lender thinks you put a $5,000 deposit down, but you actually put 10 or vice versa. Now you're scrambling to verify everything again. So make sure your lender knows how much the deposit is. Occupancy is the big thing. If you're buying homes, your primary residence, just about every security instrument on a loan is going to tell you got to be in there within 60 days. In other words, 59 days after closing. As a primary residence, will continue to do so. Continue to occupy as your primary residence for the next 12 months after you move in. If you will not be occupying it within 60 days, then it does change the occupancy type and can change up your loan, possibly even the rates. And pricing is very important. So are you not moving in? This can come up along the process. It could change things. You don't want lender to know at the last minute, and they will find out. On that, whether you're doing a rent back to the seller, suppose the seller's renting back from you, but while they wait for a new house to be built or whatever the case is, if that's rent back is more than another 59 days after closing, then the lender's going to go, now we got to do this as an investment property. Conversely, you're buying somebody's investment property and tenants in there, but their lease isn't up for another 4 months after closing. Well, in most cases, Lender's going to ask for a copy. They know it's 10 occupied, and it will come up when your appraiser comes in, because the appraiser's going to say occupied by tenant. And go, okay, when's the lease expire for that tenant? Or how are they going to get out? How are you going to have them out in time for you to fulfill your obligation on the occupancy? If you're not going to occupy, it's going to be a vacation home, then I would just say that there. If it's going to be investment property, say it there. Everybody will be able to attend closing. Doesn't necessarily mean literally in this day of COVID, but it means you'd, at least virtually or literally, that you'll be able to attend the closing. The reason being is logistics for the closing. Sometimes if that's not going to happen, then other arrangements have to be made to get the closing to work out right. Such as settlement will not be a mail-away closing. Either it will be mail-away or it won't be a mail-away. Mail-away closing is when one party or both are not going to be local to the closing. I see that with vacation homes mostly, sometimes investment, rarely on a primary residence, though that can happen too. Buying a vacation home in Florida, you live in one state, seller lives in another. Nobody lives in Florida. Title company is going to send it, and nobody wants to go down there for the closing. Title company is going to mail the package to you. They got to get it back in time, still meet the closing, which means they got to get it done early, which means logistics have to be accounted for the extra few days to handle that. So you do want to let your lender know that up front, whether it's you or the seller. Not taking a title under trust, or you are taking title under trust. Trusts have to be approved. Look at your application. Does it say you're taking title under trust? Good, your lender already knows that. You're fine. You're going to approve the trust. If it does not say you're taking title under trust, they don't know that. And if you plan on taking under trust, you need to let them know right away, because the trust has to be approved. And that's just part of the underwriting process. Taking title under an LLC, also, if you plan to do that, you do want the lender to let your lender or me, whoever you're working with, you got to let them know that up front. Many loan programs won't let you close under an LLC to begin with. There are some programs that will allow you to switch to an LLC the day after closing or at a certain period after closing, and that's fine. If that is your plan, then let your lender know so that they can make sure that your loan is going through the appropriate investor that's going to allow you to do that. I've done another video that covers that. You're going to use a power of attorney or you're not. If you are using a power of attorney, your lender needs to know that as soon as possible. Some investors don't allow it at all, or some lenders don't allow it. Most of them do, but sometimes they still have certain parameters that they'll allow it. And they also have to review it and approve it to make sure that they're okay with it. Most time it has to be a specific power of attorney. It cannot be a general power of attorney. So if you are going to do a power of attorney, let your lender know, contact your title company to write up that power of attorney. They're going to send it to you or your lender or both to get it approved. And then if they approve it, everybody's good and keep on going. So, but something to cover up front. You want property tax insurance included with the mortgage payment, or you do not. Either way, make sure that's correct. Number one, it can affect pricing. Number two, affect costs at closing, underwriting, or a number of things. So make sure you've got that squared away up front. Some loan programs will not allow you to not have it included. So talk to your lender to determine if that's the case, whether you can have it or not. Many states, most states, you got to have at least 20% down if you're doing your purchase before you can do no escrows. States like California, if you're doing at least 10% down, you can go no escrows. A few other states have their nuances. But it's important to know, are you escrowing or not? Property is or is not a multi-unit property. It's a single-family home. It's multiple units. It's going to affect pricing, can affect underwriting, everything else. So make sure your lender knows just how many units are in this property. Please know you've got some nuances. Sometimes single-family home with an accessory unit or in-law suite is considered a single family. Sometimes could come in and be a 2-unit property. Depends on each property as to how that's done. It can affect pricing. Some investors will do multi-unit properties and so forth. Properties on fewer than 10 acres, 20 acres, whatever. You're pretty much safe all in if your property's under 10 acres. If it's more than that, make sure your lender knows. Some lenders or investors have acreage limits, 10, 15, 20, whatever the case runs. It varies from one to the next. But if you have more more than say 5, it's a good idea just to heads up to your lender, say, hey, I'm buying this house on 10 acres or whatever, just so that they make sure it's done properly. Home does not straddle 2 or more parcels. Sometimes you have one deed but multiple parcels. Some lenders will not allow the house to straddle more than one of those parcels. It can be on one parcel and the other part can be empty. That's fine. Some will allow it, some won't. It's important to know up front. A lot of these things I go through that are important to know up front, because ultimately the lender will find out when the title comes in, your appraisal comes in. At that point, you're weeks into the process, or days anyhow. And now things have to be corrected and put back on the rails. Property is or is not a condominium. It's pretty simple for the most part. Please note, some condominiums look like townhomes, and they're still condominiums. Make sure your lender knows. If you're buying a townhouse condominium, don't assume that the lender you're working with knows right away that is also a condominium. They will know when the appraisal and the title work comes in, and if they've gone along thinking that this is a regular townhome and find out it's a condo, now they got to prove the project, do a whole bunch of other things, and it can throw off your timing. So make sure they know up front you are or are not buying a condominium, no matter what it looks like. Some condominiums even look like single-family detached homes. It's rare, but they're out there. I've done some loans on them. Usually in that case, they're treated like a regular house, but it's still good to let your lender know. Property is not a condo-tel. That's a condo. It looks like a hotel. Certain investors will do that. There's some nuances to it. It's important to know up front so you can be properly allocated to the right investor. Same with the co-op. Some investors won't do them. Some will. It's important to know just because of the way the process works as to how it has to be done. It is or is not new construction. Again, got to know what we're dealing with. Most of the time your lender knows whether or not it is up front. It's good to just make sure if it is. Yeah, mainly because there are different things to get, timing with the appraisal, occupancy permit, and so forth. Whether or not it's a manufactured home is also important. There are pricing variances for them. Some lenders, investors won't do a manufactured home. Make sure you know if it is. Some cases, manufactured homes have been changed so much over the years you don't even realize it is, but you will find out when the appraisal comes in. I had one not too long ago, actually some years ago. Looked like a house, smelled like a house. Appraisal goes in. Goes, nope, it's a manufactured home. A couple of things. One, if you look underneath of it, it's the undercarriage, definitely manufactured home. Number 2, the HUD stickers, that say it meets certain requirements, still on the home. So we had to revamp or redo the entire structure of the loan to fit a manufactured home. That takes time. There are extra things that have to be done. So again, if you're buying something like that and you think it is, let your lender know before they find out anyhow. Property zoned residential, pretty common. Some areas don't have zoning. That's fine. Commercial is usually okay on a residential mortgage. Industrial is usually not okay on it, primarily because most jurisdictions, number 1, they'll consider it a hard resale if something happens. Hard to resell it in industrial zoned areas. Number 2, many jurisdictions, it's grandfathered use. If you got a house in an industrial area, if that house burns down, the jurisdiction says tough, you can't rebuild it. So watch for that. I had one years ago. Guy was buying, came back industrial, and I had to explain to him. I said, dude, your neighbors could actually store toxic waste. So not good. Solar panels, whether you're buying them or leasing, good to let your lender know. Especially if it's a lease. There are some investors that just don't like the leases. Top of which, whatever the case may be, may have to be accounted for, especially if you're leasing it, in your debt to income ratio. So make sure your lender knows whether or not the property has solar panels. Does it have a submerged fuel tank? I think this one's kind of self-evident. Fuel can leak. Above ground's okay. Submerged, let your lender know. Fall tower of a fall line of a high voltage tower, also important to know, because that sucker tips over and touches the house, could burn down. A lot of lenders won't touch it if you're within that. I've never actually run into one, but I know the guideline exists. I still always ask. Property does not have mold, because mold's an issue. If you do have mold, just let them know. We'll go over what kind of remediation, if any, is required. to continue on your happy way into your new home. Problem drywall, there's a period of time in the early part of 2000s for a few years where builders were using a bit of a problem. Drywall was crumbling. I think it was getting moldy. And as a consequence, because of the issues, lenders just won't touch it. I think by now, most of it's been remediated. I haven't seen it in a number of years, but I still ask people. Utilities are on and functioning properly. Are they? Because the appraiser's going out there, he's flicking switches, running the water. Nothing's coming out, lights aren't coming on because utilities aren't on. Well, now you got an extra trip fee from the appraiser because he's going to go home in his merry way and not finish the appraisal till somebody says, okay, they're on now. Then he's going to go back and check them, make sure they work because it's part of the appraisal. Because if you don't have water and electricity, it's a problem. Property is subject to homeowner association fee or not. If it is, got to know, got to account for the debt to income ratio, condominium association, homeowner association. In some cases, we even got to prove the association. Definitely if it's a condo, sometimes if it's just a regular HOA. Property is not subject to a private transfer fee covenant. They exist, not very much of them. I've yet to run into one, but it's out there and the lenders won't touch those with 10-foot pole. What that is whoever built the house years ago, the builder put into a covenant in the home, says, hey, every time this home sells, I get a piece of the action. Well, lenders don't like that. So if you happen to have a private transfer fee covenant in a purchase, that is a problem. Like I said, haven't run into it yet in all these years, but the one time I don't ask, I might, so I just make sure it's on there. Property serviced by public water and sewage or not. Depends on what it is. Public water, public sewage, pretty straightforward. If you have a private well or private sewage or both, you may or may not need to get it tested. Depends on the lender, program, things like that. In some cases, depends on the program. If it's on private, but you are within a reasonable connection distance of public, they'll make you attach. So you got to know these things up front. Lenders got to know them so they can guide you properly. Property is or is not on a private roadway, shared driveway. The reason for this is if you are in a private roadway with a bunch of other people, it's a private road, not a county or city road, or you share driveway with somebody else, somebody's got to maintain it. Or there's got to be an agreement in place how it's going to be maintained. Usually that agreement has to be recorded. So let your lender know up front, hey, I'm on a private roadway or I have a shared driveway with the house next door, whatever the case may be, and they can guide you accordingly. Generally, it just calls for a recorded maintenance agreement. So the title company will be looking for that. If that's the case, if you don't have a recorded maintenance agreement, again, get with your lender so they can look into alternatives or guide you accordingly to get that squared away. Ground rent, that's where somebody owns the land under you, rents it to you, nominal fee. It does not mean they can show up and have a barbecue in your backyard. It's not how ground rents work. And it's kind of a Maryland thing. A couple other areas have them around the country. I know the way they work in Maryland is you can redeem it if you want. Seller can't, or the ground rent holder can't say no if that's the case. But yeah, it's important to know because it's part of the approval process. Just looking at the ground rent, making sure it doesn't jeopardize the lender's position on the house. I think there's even an investor or two out there that might simply not touch ground rent. So you don't want to be in that position. Most time contract will say whether or not it's ground rent because it's either going to tell you, say, it's fee simple or leasehold, which is ground rent. But just make sure your lender knows. It'll be on the application too, checked off, which it is. Double check that it's correct on your application. Front foot fee, property front foot fee. The common use of that, sometimes it's called a utility assessment fee, something like that. Rare if your house is over 30 years old because usually they're spread out over about 20 to 30 years. What it is builder built your neighborhood, laid out the main pipes under the roadways out front. And then the way they figured out how everybody's responsibility to pay for the cost of that is how much of your yard fronts the street. The more you front, the bigger the bill. And then it's amortized over a certain period and passes along from each seller until that amortization runs out. It's mentioned it's usually 20 to 30 years max. In that case, A little bit of trivia. It also an old form of taxation in some areas based on how much of the yard or the house faced frontward. If you've been into some old cities and you see a bunch of houses facing sideways, yeah, the original tax setup was probably based on front feet. Are you getting seller help toward your closing costs or down payment? Important to know because your loan's got to be structured properly and underwritten properly. It can't be not something that can be done as you sit at the table, because all of a sudden you're surprised in the lender with seller help. You're going to be sitting around for a long time or even moving to closing if you do that. So they got to know right away. And I have another video that covers it. Essentially, if you're getting closing cost help, it gets applied toward your closing costs first to the limit allowed for that program. And then the rest is just used in most cases to increase your down payment. Same with the real estate broker rebate. Lender does not always know about that because it's rarely in the contract itself. Sometimes it is, but not always. So it's important to know for the same reason, loan structure. So make sure your lender knows whether or not you're getting these things. No personal property conveyed with the sale. You're buying a home does not mean you get to have the boat, the car, or whatever else attached that somebody's thrown in to sweeten the deal. We do loan some houses, not on furniture or cars. All lenders like that, so let them know if you've got personal property, and then they will advise you accordingly on loan structure. Total real estate commission does not exceed 8% of the purchase price. Some lenders will put the skids on if it looks like they're getting more than that. Most cases they're not. That's something you're going to really run into. But again, something to ask so that no surprise at the end and awkward conversations with the agents. You're not going to take any trips where you can't provide documentation while away immediately. I ask this to everybody because if they're going away and they're just going to be completely off the grid, we got to know, because we got to be able to schedule things, and we have to work around that and schedule accordingly. Not so much a big deal now. I get clients that are in Asia, Europe, wherever, while during the loan process, no less. And I need something, they log in, they send it to me. We're good. But if you think you're going to have any period of more than a day where you're just simply going to be off the grid, let your lender know. Settlement agent, most lenders like to order that title work the first day. Give title company time to get title work back because that has to be reviewed and approved. And of course, the sooner you know it, the quicker you can react to anything that may come up in it. So make sure you know your title company. On there, if you do know your title company, make sure your lender knows. If you haven't talked to your title company by that time, it's a good idea that you do, because you want to know what they're charging you, how much title insurance, what kind of coverage you get. Don't assume your lender knows those fees. Don't even assume they're correct on the loan estimate goes out, because the initial loan estimate that goes out could have more generic charges based on a completely different title company your lender's familiar with, and will not necessarily be those of the one you're working with. So, good idea to know that up front. And then the closing date's important. When are you closing? It keeps everybody on the same page on that closing date. And most states, closing date, funding date are the same. Signing date's the same. Escrow states such as California are a little bit different. You're going to sign before the closing date, 1, 2, 3 days before that. And that way you can close on time, just because of how they handle the escrows there. And the last blurb, really, I just tell everybody, watch out for cyber fraud. Make sure you know who you're wiring funds to. In general, most lenders, most real estate agents will not send you wiring instructions, ever, because we all know about the fraud that's going on out there with people hijacking or impersonating email accounts. So if you get wire instructions from your lender or your real estate agent, it's best to really confirm with them directly, not with a number and email. And same if you get them from your title company, who's really should be the only one that's going to be sending you wire instructions. If you have further questions about all these items, leave a comment below. If you're working with me, thank you for business again. Email me directly. Have a great day, and hope you enjoy. Bye-bye.